You're listening to Risk and Resolve, where leadership, business, and risk management collide. We bring you real conversations, sharp insights, and strategies for success. And now for your hosts, Ben Conner and Todd Hufford.
Welcome back to another episode of Risk and Resolve. I'm Ben Conner alongside Todd Hufford. Today's special guest is truly that special. It's my dad, Jim Conner. You might even notice this is our first episode recording in person.
In real life.
Real life, real person. So, and thanks to Roundtable Recording and Indy for this opportunity. But today's journey will be a journey through family business, the story of Conner Insurance, as well as some family history. So thanks for joining us, Dad.
Glad to be here.
Well, not really sure where to start because there's a lot there. Obviously, for me, 40 years of history, and for you, more than that. But I guess we should start back in 1973. Let's go there, when you guys purchased the agency. So if you could, tell us a little bit of the context of buying the insurance agency in 1973 and the context around that.
The context, first of all, it's good to be here with you guys. The context was Jack was the second oldest son, was the only one working at the business at the time. And he had been there about a year. And we got a call, meaning my youngest brother, Tom, myself, and Clay, saying that Dad was going to sell the business. And he wanted to do other things, and he wanted to go through a transition. And so transition of not being responsible for everything every day, it's time to move on and go through the transition of who's going to run the business. So we got a call and said, let's have a family meeting at the house. And we talked about it. And he said, I want to sell the business. And are you guys interested? So I said immediately yes, because that's where I wanted to be to begin with. Tom really at high school age just was kind of, yeah, okay, I'll go along for the ride. And Clay was working at Raffensperger Hughes as a stockbroker. And he had been there a few years, and he said, yeah, I think that'd be okay. And so we decided at that point, the four of us would sign a note for $50,000 as a down payment to him, and then 10 years at $10,000 a year to pay off the note. So that's what his sale price was. And then
plus the salary.
Yeah. The way I said to the salary, I said, you're still going to be doing a lot of the stuff for the next few years, teaching us how to do this business. What salary do you want? So he came up with a number, and it was not at all a stretch. He was very generous that way. And so that's how we started. And he would show up every day like he was still working there. And that was that way. And see, that was 73. I showed up in 74, and Tom showed up in 76 or 75, late 75. So we kind of came in, rolling in during that time frame, and he was still there. And I think he kind of rolled out at the 78, 79 time as far as day-to-day stuff. And we really kind of just took over the business at that point.
So how old would he have been in 73 when he sold the business?
He was 55.
Yeah.
So he sold, as a 55-year-old, he sold his business to his four boys.
Right.
Two were out of college.
Yes.
One, you in college, Tom being in high school.
High school.
So to a lot of outside parties, that probably looks insane.
Yes.
To do it that way. If you could, I think that probably suggests like what kind of guy decides to do that. So put a pin in 1973. Let's rewind the clock to just give us a little bit of history or context around like your dad.
Mm-hmm.
The guy, the 55-year-old that would sell his business to his boys. Just give some context to his story or who he was as a person real quick.
Well, for business-wise, he was a sole proprietor. He really never had more than, I think, 4 or 5 employees. at that time when I came in the business. He had asked a couple of agents to join him, but they didn't perform well enough for them to stick around. But his idea was, what I saw growing up was he liked being around people who accomplish stuff, business owners. So business owners are entrepreneurial. They make decisions. They're accountable for payroll. They know how to work with banks. They know how to get things done. They invent things. Those kind of people that, the insurance business suited him fabulous because to get an account and he would go out and get commercial business, he would have to get to know the guys that ran the business, owned the business. And those kind of people were just like he was, independent, get it done on your own, figure out how to deal with risk, develop relationships, stay ahead of competition, be accountable for everything. He loved being around those kind of people. And so that's the way he was. And his background was that way when he grew up, only child, and went to Duke and was in the war and on his own for, in the jungles and all that. And there's a book about that. But he was very much self-sufficient and he was accountable for his own success or failure. So he didn't have any kind of corporate experience. He didn't have any kind of thing to fall back on to support his family. And so he was just, and that's what I grew up with, is that at home, he talked about business. He talked about these people that ran these businesses, how they accomplished stuff and how they were so different than the people that were working in the business, just a different type of makeup. And he liked being around those people. And he was around those people, not only in business, but he was also in his time that was not business. He was doing things with those people. And that's who I was exposed to. So whether it was through the Christian Businessmen's Committee, all the people that ran businesses, it was professional people, it was business people. And so they all hung out together and their time away from the business to do other projects. And those are the people I saw, and I wanted to be around those people because you like being around people who are successful, accomplish something, make decisions, risk things. So that's what I was used to. That's all we talked about. So the idea of when I was at IU, one of my last classes, my senior year, was an introduction to, and it was some sort of class where you had to go out and put your resume together. And all the people at IU, a business school, basically had those career days where they would have all these companies show up. And they were all Fortune 500 companies. Back then it was the big 8 accounting firms. It was Procter & Gamble and Lilly and GM and all the companies. That's what the business school tried to funnel you in. And so when I went into the class and he says, put your resume together and go get some interviews set up, I said, I don't think I need to do that.
Nope.
I'm invested in part owner of a business. I've already got a job, got a school. And it was shocking. Like you said earlier, it was just odd that somebody would also be invested already in a business. And then on the other side of it, Dad used to get feedback where he would say, people would tell him that owned businesses, of why would you sell your business and not get all the cash up front? Why would you play banker? What if they failed? What if it went under? And so his risk was, were we really going to make it or not? To make a 10-year payoff. Doesn't sound like a lot of money now, but $10,000 a year plus salary and all that kind of stuff was dependent upon that to live. Mm-hmm. And so he said, I don't want to straddle them with a bank. And I think they're going to make it. And I made it. They made it. There's no other option. If you do something, you're going to complete it. So it was kind of like, and I've used the term several times with people, is that if you're going to commit to a business, you burn the ships. There's no way you can not make it happen. That's just not an option. So that's the way he was. That's the way I was. That's the way I felt, that if I'm going to do this, I'm going to figure out a way to get it done. So, but most people thought we were crazy for buying the business because we're so young, didn't know anything about insurance. How can you make that commitment at that age? Why don't you go work for a Fortune 500 company for 3 or 4 or 5 years, then come back and all that? I didn't want to do that. And then the other side of it, Dad's contemporaries were saying, why would you give these guys a note and they're so young? Why would you sell the business to a kid in college and high school? I mean, they don't know anything. And so, but that's the unusual thing that, quite frankly, my whole life with family has kind of been that way. It's always been unusual.
So speaking of that, you mentioned only child, went to Duke, was in the war. Obviously had a very unique war experience, being missing in action in the jungles of the Philippines for 34 months. So all of those are very shaping opportunities. When you think about your childhood or the way he led in business, how much of that was shaped by the war and his experience being on his own versus how much was shaped maybe even prior to that?
Well, I think two things shaped him, like what you're asking about, is one, being an only child and the fact that his father was a traveling salesman and moved several times when Dad was growing up. He had to adapt to these various towns and cities he moved in when he was growing up. As an only child, he didn't have, his father traveled, I think it was more than 300 days a year. So his mother was instrumental, and she believed in him. She supported him. She was demanding in a loving way. And then he had to go to school and fit in with new people all the time. And he was very relational driven. And so he didn't have a brother or sister or other friends over time that he depended upon. He was dependent upon going out and meeting new people and developing relationships and learning which people had good intentions and which people you learned not to mess around with because it was not a good fit. That was one thing. So he learned those skills growing up. I think the war brought to him the idea of life can be pleasurable and life can give you things to do that are miscellaneous and frivolous. And when he was in the war and when he came back, I remember him being very serious about how you're going to spend your life. It can end quickly. Things can happen that will affect your life permanently. People can be a very good thing in your life, and people can also derail you. So to him, life was a serious thing you had to consider, you had to work towards, and you had to figure out what you wanted to do. So our relationship was unlike relationships I saw my friends with their dads. Going out and playing football together or going to a basketball game or doing that. And on top of that, my dad was legally blind. He had peripheral vision, but he couldn't see very well straightforward, even though he could drive, which was always a real adventure. But I didn't have that kind of friend relationship with my father. I had a relationship where his goal was to teach me how to be an adult, how to be on my own, and what are the serious things in life like faith, eternal life, relationship with God. Those are the things that are going to be meaningful. Did I miss out on some things that I shared with my family? Yeah. He was pretty much a pendulum that was a little bit too far on, not the enjoyment of life, but just the kind of the ability to kind of lighten up. He wasn't a lighten up type person. He was always doing a project. Reminds me a lot of Utah in that regard. He was projects all the time. Even raising his sons were basically about a project. Oh, you guys want to get into some trains or stuff? Let's go build out a total train set in the basement of the house. And let's just make it something that nobody else ever had. Oh, you guys want to do a pony farm? I want to do a farm. Well, I'm going to do a pony farm that's going to look like Lexington, Kentucky. I'm not going to put up a barn and a couple of wire fences and bring in some ponies and have it mess it up. No, we're going to make it project out. I'm going to buy a post hole digger, or I'm going to go out and get, it was all out for everything, which is the way he kind of was in the war. If I'm going to survive, I'm going to go all out.
Well, on that post hole digger, wasn't it attached to like an old Jeep?
Yeah.
I mean, this wasn't just a post hole digger. This was
this was a
official.
And he got the sulky for the ponies to be able to pull the kids around in, and he got a sleigh that looked like Santa's sleigh to pull the family around in the snow. I mean, it was like all out, everything. And so,
Did he sleep much?
yeah, he got up early. He was 6 o'clock,
Mm-hmm.
go to bed at 10:30, 11. But
Go.
yeah, he'd get up and go.
No distractions, it sounds like.
No. And it was always, here's what I'm going to do today. Here's,
Mhm.
it's always, and it was like you went along with it. You didn't have a choice. If he had any kind of authority over you, you were going to do what he wanted to do. And that's why he always told all four of us that when, hey, when you guys get married, make sure you find a woman that understands the idea of if you're going to be the leader and accountable and all that, they got to buy your program. He used that all the time,
Mhm.
of buying your program, meaning that they know what they're getting into and they're not going to try and change you, or they're not going to try to make you into something that you're not. And, by the time you're married, if you don't know what you want to do in life and you don't know where you want to go, how do they know what your program is? So they're just marrying somebody they have no direction with. So I remember him talking to my wife and talking to Jack's wife and Tom's. It's like, hey, if you really want to hook up with these guys or this guy, can you commit to their program? What's the program? Well, the program is they're going to be in the insurance business. They're going to be a lot of time with relationship with God. They're going to be with family. Now, we understand you got your family from the wife's perspective, but this family, they've already decided what they're going to do. They're going to work together. He didn't know at that time they were going to live together next door to
Right.
each other, but, we were together quite a bit. And that was our social life, most of the time was our family. We had outside friends, but,
Because he's telling you guys that in mid-70s,
oh yeah,
early mid-70s, you didn't move back to the farm together until 86.
86, right? So we all moved back. But yeah, it was a very different relationship. And because he was so focused and because he was so project driven, all of my friends, when they came over, said, that guy's intimidating. I mean, that guy is like, he doesn't screw around with anything. I never saw him in a bathing suit. I never saw him wear shorts. I never saw him in a pair of jeans.
And you never saw him at one of your baseball or sports games?
Oh, no. Never came to an event. He couldn't see. He went to one, I was in a music thing at school, Music Men, they called it, a bunch of 30 high school guys, and we sang. We had a Christmas program at the auditorium at North Central, and he says, okay, I'll go to that. So before we went on stage in this Christmas program, the girls' ensemble came off, and they said, did you see that weird guy in the front row? He's got binoculars looking at us. So I go out there, and that's him trying to find me with his binoculars.
Because you can't see.
And he can't see. So the only way he could see me was binoculars. Every time he read, he had a big magnifying glass, which I still have at home. But, they thought he was a perv because he had binoculars on in the
just
front
blind.
row. So what's the sense of going to a baseball game or going to anything else?
He'd be thrown out today.
Yeah, we went to Disneyland back in the 70s, and he was coat and tie. I mean, just the way he was. Just not like other dads, although a lot of those other dads were good guys too.
Mm-hmm.
I mean, I can think of several parents of my friends that were just really good people, but they were different.
So you mentioned his dynamic and his dynamic with his projects and that sort of thing. What was it like, the dynamic of you and your brothers, like in the household? What was that whole dynamic like with even your mom and your dad and 4 boys, and he started
Right.
the agency and all that kind of stuff?
Yeah. Mom, it's funny thing about mom is that she was the only child. So she didn't have any sisters or brothers. So they were kind of like some way similar in the sense that their family, their relationships with us, that was the key for her. Her job was us. And so she didn't want to go do a bunch of other stuff with friends and go out and do evenings with other people. She really wasn't somebody that really wanted to be outside entertaining or anything. She wanted to be home with her sons. And yet she was also, because of her parents, she was very direct, and she was very, I don't want to say cold, but she was just direct. I mean, she was around a bunch of boys all the time. So we were all direct because Dad was direct. You know, if you can't communicate with him, he would really press you because, you know, communication was what he was all about. And learning stuff and be able to, you know, dinner table, we would sit there and talk about, why do you believe this? And what's this teacher trying to tell you? And is this teacher credible? And what about history? And what about scripture? And I mean, it was always something, it was a learning process all the time. So I would go to school and it was like I'm learning things that I don't feel are important compared to what I was learning at home. And that was wrong on my part. I should have done more work in school. But Mom was very direct, very open, and she had no problem saying no, which is unique to some people. Hey, Mom, I'm going to join the Boy Scouts. No, not doing that. We're, I've got the farm back here and you guys are painting fences on this weekend and you're not going to, I can't do it. We're not doing all this. You're staying home. So she was a very good complement to his style of raising the family. She bought his program, so to speak, in the sense of this is what we're committing to. She supported him. She never said anything bad about him. They never criticized each other in front of us. We never saw them in an argument. I never saw anything that was ill will towards each other. And they were somewhat similar in that, but they were also very different. And but yeah, she had a very strict mother who came from a very prestigious family. And that was the prestigious family she grew up in back in the early 20s, was the fact that there's a right way and a wrong way to do something. And she demanded that you do things the right way, the proper culture, the proper etiquette, the proper way way she was. She was very demanding in that regard. And so Mom grew up underneath that. And so when she went from a demanding mother to a project-driven husband, and she got married at age 19. So, and then she had a kid a year later, and then I think she had all four of us by the time she was like 26 or 27. So she was busy all the time, but it was like she was always connected to somebody in authority.
Yeah. It's like two rigid
Structures.
cultures
Yeah.
coming together, but they're rigid in different areas.
In different ways.
So rigid in, culture, family, manners,
Right.
being proper, being all those kind of things. And
Yep.
then rigid of like, this is how you act, this is how you survive, this is what's important, this is what's not.
This is our project. We're doing it this way.
Yeah.
Yeah. There wasn't much debate about what we're doing. It was pretty simple. What Dad had going on, that was the project. That's what we did.
Mm-hmm.
And she was along with it, but she wouldn't get in and do the stuff that, the training stuff and all that. She would have the meals ready. They would go out every Friday night, and then we would stay home. And then all the rest of the time, she did all the meals and did everything. And she had help every once in a while. She'd have a housekeeper come in every once in a while and do some things. But, with 50 acres and 4 boys trying to be boys and not get caught by our father doing stuff.
I never sensed, and I knew her for many years, that she had a passion she was chasing.
Her passion was the 4 of us. That's what it was. And even after we all moved out and got married, and basically it was, we knew she wanted us to stay in contact and be with her as much as we could. And when she lived in Florida until 2000, what was that, 3 when she came back?
Ish, yeah.
She would come on down to Florida, see me there and all that. And so we did. But when she came back in 2003, it was like, well, it was all of us. It was about us, even when she was away. She didn't have a bunch of friends she went and played cards with, or she didn't go shopping malls all the time. She
didn't have a bunch of hobbies?
No.
So to your point about the compatibility, it almost took someone like her with not a lot of bells she wanted to ring,
right,
so that she could be there to ring his bells,
right,
whatever his project was of the moment, and the basic needs of the family.
Yeah. Yep. Oh, Clay's going to do this, so we're just going to go along with that. That's what it is. So
a little context to your family, which that was your dad who decided to sell a business to uh, his sons that were in varying stages of their life. So let's go 73 going forward. You guys buy the business. Even let's fast forward even more. You come into the business. Tom comes into the business. What were some of those early years like for you guys? Because at that point, you guys were working alongside your dad, right?
Mm-hmm.
So what was that like?
And how many employees were there when you showed up?
I think there was like 4.
Mm-hmm.
There's an accounting person, and then there was 2 or 3 ladies that were what you guys would call account managers
Mm-hmm.
that would do the data. And I remember everything was manually driven.
Mhm.
When we would type up or when we would get accounts receivable at the end of each month, and we were always told and taught about accounting was you got to know where you are at all times accounting. So you know your sales, you know your billing systems, you know your expenses, all that stuff. You were inundated with knowing that. You had to know that. And you had a 12-year plan of which Dad put together a 12-year, here's how many your growth's going to be in each area, whether it's property and casualty, whether it's personal lines, life insurance, health insurance, all that. There was a 12-year plan, and it was all mapped out. And Dad had a filing system that was kind of like what you go in the library. And we had, I remember, several business leaders, including Ethan Jackson, who has a huge business. He came up and he says, I want to learn what your filing system is. I've never seen one like this. It was typical. A project is going to be unique, best, fast. It's going to be this.
Mm-hmm.
And that's what he has, not on a big scale like other businesses, but it was like, how did you do that? And all that kind of stuff. So everything was monitored and challenged in the sense of learning systems. Dad would have relationships with when he sold us the business, he had relationships with all the business owners of our accounts. They were all his relationships. They weren't ours. So we started going out and having those meetings with him to those people and developing relationships to the point where he kind of phased out. And then I would go on my accounts and Jack would go on his accounts, and Tom basically had personal line stuff he was doing, and Clay never did commercial. He was always in the life insurance. And back then, health insurance was individual policies.
Wasn't a big deal.
It wasn't a big issue. They didn't have the law that said you could deduct your premiums if you were an employee. They didn't have that kind of grouping yet. Some of them did just because they wanted to group it, but they didn't have the
deduction.
They didn't have the ability, or they didn't have the incentive to, I got to have a group plan. It was just developing. So Jack and I would go out on these calls, and then Dad would not go out on the calls. And going with him, he had a system on how to get renewal stuff done. He had a system on how you go out and talk to the insurance companies. And everything was a project. So we learned those projects. Everything was, I remember our first photocopy machine. It had that acetate paper that would roll up, and it was kind of used to be not paper. It was kind of a different kind of paper. But the light that would, as you would take a picture, was a light bulb. And so the light bulb would sometimes just pop, like it does on a regular light bulb. And I got to go fix the photocopier. You pull the thing back and you unscrew a light bulb and you screw another one in. And you think about no computers. We had typewriters. They had double paper because we didn't have the whiteout at that point, or self-correcting typewriters.
Yeah.
We had, it was archaic compared to what you guys and what I've seen going through it. I can remember the first time I went on computer and I was doing that project with a vendor, putting everything on computer. It was crazy. Learning that kind of stuff. And Dad would go, what are you guys doing? But everything was labor intensive. Tom was doing billings, typing invoices on personal lines bills. $200 for this quarter to this guy, Mr. Herpfall, or this guy or that guy. He typed the bill out. And it was 3 or 4 copies. You have the original for him, you have the one for the accounts receivable department, and you have one for his file. So you file 3 different things, you type up the invoice. And Tom's first desk, I had a desk that was a secretary desk. It was a desk and they had a return that you put a typewriter on. That was his part of the desk. He'd sit on that and I'd sit in the desk. And he'd sit there trying to figure out stuff. And we were in a little room with no window. And we're doing that stuff. And things just didn't move fast because it was so labor intensive. Everything, every invoice, all your accounts receivable were typed up individually on a sheet that the accounting person would do. So at the end of the month, she would give you a 3-page listing of here's the account, here's how much they owe. Is it 30, 60, 90 days? And here's how far they're out. And she'd have to type every one of them off those sheets of the invoices that were not paid. So she flipped through those invoices and typed the thing on a sheet, and here's your accounts receivable.
How big do you think the biggest insurance agency in Indy was back in the early 70s by head count?
Well, back then there was a company called Barton Curl McLaren. In fact, Ed McLaren was old school and used to come to my grandmother's house with his wife and a couple of other people that were business owners for their monthly dinner meetings. They had an
economic
club.
Yeah.
And so Ed McLaren was a wonderful guy. And Barton Curl McLaren was on the Circle. And they had been around forever. And well respected. MJ was upcoming. They were kind of growing. Wells had been around forever. And Wells was at 18th and Meridian. Gregor and Appel was on North Street, I think, in a building of about 5,000 square feet. They weren't huge, but they were 20, 30 people. But they had been around forever.
Yeah. That was the biggest at the time.
For a long time.
Right.
Even then. And Wells had been around because Mike Wells, who we competed against, his dad, and then his father was Herman Wells, and Bill Wells was the next guy, and Bill Wells was good friends with Dad. And but Barton Curl McLaren was one of the bigger ones, and then they sold out to Aon. Aon came in and bought them.
Was that the first acquisition you remember in town?
Yep.
Do you remember roughly what year that was?
No. If I'm guessing, I'd say maybe late 70s. Late 70s.
Did you ever give much thought to, your dad started the business in 49. He sold in 73. So he was in the business for 20-some years?
Yeah.
Not that long. I mean, he stayed over and worked past. That kind of addressed some of the issues with his contemporaries saying, how do you trust him? Well, I'm still there every day handling most of the accounts.
Right.
59, 69, 79. Maybe he's out by 79. So he's in the business for 30 years.
Right. And then before that, it was a couple of years with Aetna as an independent, kind of a independent career agent with Aetna selling life insurance.
But also when I think about his career, you got the 20 years of growing up. You got college years at Duke, 4 years. You've got the war, which he's missing in action for 34 months, and he's in it before that, and he's in it a little bit after that. So that's 4 or 5 years.
Right. And
then he spent 4 years after that working for Artie Bulova and some other things. So he had kind of that 12-year sort of post-high school. So he had his 20 plus 12 plus 30, because he died in 83. So he died 10 years after he sold the agency.
He died 2 months before his last payment on the $10,000 a year payout for 10 years.
Which, another question, you said you put $50,000 down.
Yeah.
Where'd that money come from?
The bank. Don Tansel at Merchants Bank.
So you did have to get a loan?
Yeah.
Interesting.
And Don Tansel was a good friend of Dad. He was president of Merchants. We went down there and...
The original Merchants.
Yeah. The original Merchants. And so we went down there and $50,000 was pretty significant. I mean, our total revenue of the company was $150.
Yeah.
So you're borrowing a third.
So he sold for 1x.
Yeah. 1x. And I think we were paying him like 3% on the $10,000 a year or something. So we pay the $10,000, then we pay 3% on top of that, $3,000 or so.
Right.
300, whatever it was.
Do you
Well-
remember those first few years of income being reasonable, comparable to your friends at some of these other big companies, sub what your friends were getting? Or, I'm starting off making maybe a little more than.
I think we were probably pretty comparable.
Okay.
I mean, I think it was like, I don't know if I was making 20 grand or 18 or something, but, my apartment was $250 a month.
Mhm.
And so, I mean, it's all relative,
relative.
to what your expenses are. But there wasn't a lot of extra money in it because 150,000 revenue and you got 3 or 4 people, but those people were getting paid 12,000, maybe 13, 14,000 a year.
Mm-hmm.
And so it was, and it took a while to go from 150 up. I mean, it was not this huge growth as far as, I mean, we just labored and kept at it and kept at it and kept at it. And we'd add some clients and all that kind of stuff. But it was the first, until about 70, I mean, 73, and I came in 74, those 3 or 4 years, it was.
How many years did it take you guys to move beyond yourselves and actually hire someone that wasn't a Conner, who was selling and servicing accounts?
Our first acquisition was 81.
So you didn't hire someone, it was through an acquisition.
Yeah. Well, it was French, and Bob French was an older gentleman, and he was a career agent with New England, where Clay was the where Clay put all his life insurance. So Bob was a guy that lived across the street from Chittard on Kessler, and he had some personal lines, and he had a couple of larger commercial accounts that he was getting tired of handling it. And so Clay introduced me to him, and we worked out a deal to have him move into our office at Atkinson Square. And then after that, in 82, I think it was 82, maybe early 83, it was early 83, we bought McLean in Broad Ripple. And I'm trying to remember his first name. But anyway, he was totally opposite of what we were. He was a country club, knew everybody, had friends that were living the high life. They were, the drinking crowd, the gambling crowd, all of that stuff was what his clients were. And so that's the lesson I learned, that when you buy an agency or you buy a relationship, you're buying people that got along with the agent that you're buying.
Yeah.
And so,
especially in that time frame.
Oh yeah. He was over at Woodstock, and he had another club down there at the athletic club. There was a room number that was the actual name of the club. I think it was called 1613 Club, and that was a room 1613, something like that, a room number. And there were several guys that were in that, and he had all these guys that were, most of them very nice guys, but their interests and our interests were just not the same. I wasn't going to go out and go drinking with them like those guys did every night. And when they go to Woodstock or they go to this place or that place, that's what McLean did, Bill McLean. And so Bill was a real social animal. And he was very he was kind of outlandish in the sense that he would dress differently. He had a sport jacket that looks like a Madras coat, colors all over it and things, and people would say, "Oh, there's Bill because look at his coat." And he was kind of almost known for being loud and kind of
He's a character,
laughing and shaking your hands and hugging you and all this kind of stuff. And that was not us.
Was he older? Was he of an age to sell?
Yeah, he was. Let's see, that would have been 83. He probably was. He was probably 60. And we had a 10-year deal with him.
So he was about your dad's age.
Yeah, probably. And he had a bunch of great accounts. And we worked hard to keep them. And we kept most of them for a long time. I mean, he agreed to the 10-year payout with not having to go to the bank. And I paid a little more than, let's see, he had, I think I paid 3 times.
Oh, wow. It's a step up from what you paid your dad.
Oh, yeah. And he was like 200 in revenue.
That's big. Well, you guys were probably, just a little over that?
Yeah, we were over that. Yeah. And so I brought his 4 people in. And
So that was like a 40% acquisition
Yeah.
of what you were.
yeah.
That's a big deal.
And the great thing about it is back then you didn't get access. There were so many different insurance companies back then, whereas
Fewer.
there's fewer because they've gone through acquisitions themselves. But back then, I think we picked up 10 companies, 8 companies that we didn't have that we wanted to get, but we couldn't get them because we weren't big enough.
Do you remember a key one in particular?
Continental was huge.
Mm-hmm.
And Continental, we had USF&G, Continental, Reliance, and at that time, I think there was Monroe. No, we had Monroe. But Continental was so big because that's when Jack went to New York to their home office and sold them on the nursing home program. And so they wrote forms and things for the nursing home programs that we ran.
Mm-hmm.
And Continental they were a great partner.
Do you remember a key account that you bought from McLean that you kept for a while that was kind of...
RCI.
Oh, that's a big one.
That was a good size account. We had the Royal Foods,
Mm-hmm.
which was the Height family,
Mm-hmm.
and
Which we still insure today. Jack, we do.
Jack's still there, and we had Dutton and Overman, which was Dutton was a very prestigious attorney that ran in certain rules. I mean, I think they did stuff with the contractor Hubert Hunt.
Mm-hmm.
They were in that relationship. We had J.W. Fence, which was a good size account. That's where I met Terry Sands. He was the CFO there.
Which became our accountant for 25, 30 years.
Yeah. And then Vadreen, which was the guy that owned it, he sold it and ended up passing away. But and that's the other thing. When you buy a guy that's a sole proprietor and he's 60 years old, most of the contacts you're buying are 60 years old or in that range. So you know you've got a time crunch on how do you use those relationships. Either the insurance companies you get, you can offset the
Mm-hmm.
selling off, buying off, and all that kind of stuff versus, I mean, it's a limited window. So
Yeah.
it was a good acquisition.
So you acquired a couple agencies in Indy
Mm-hmm.
to start your growth path, and then from there you started going elsewhere.
Well, then we got 2 agents in the west side of town that started a farm department, Del Merritt and Jim Hall. And I found them, they were on their own and they were not doing very well. And so they weren't in the farm business. They were doing just little bitty businesses and stuff. They were just small accounts. And so when they saw all the accounts that we had and all that and the companies that we had, that was the big attraction. So they wanted to come with us. And then while they were with us, they developed relationships with seed corn farming operations, big ones, through the Midwest. And all the big ones they ended up insuring. And we would go up Chicago and the seed corn conventions, and we'd see all the people up there, and we have booths and meet the guys that had 50,000 acres in Iowa. And I mean, just big operations.
Mm-hmm.
And you'd sell crop hail insurance, and that was the big number. And the crop hail, we had probably 10 million in premium, 8 to 10 million in that stuff. And eventually they went off on their own. And then I think they sold their seed corn accounts to the company that actually wrote the business. They acquired them. So I got those 2 on, and then we started doing the satellite locations. So the first one there was in Bloomington, because the guy that was the Bloomington agent was also a New England agent for life insurance, and he had property and casualty. And so we had the Bloomington one, and through the Bloomington one, I met a guy named Roland Nobis, who was the investor in that agency. And Roland he owned 3 businesses down in Bloomington, and he was kind of like a Shark Tank kind of guy. He was money only, would sit in on the meetings, but he didn't know anything about the businesses or run the businesses. But he was well known in the community as an investor. He was a German. He made money in those companies, sold a couple of companies, and we insured those companies and others. And then Roland got me into YPO, which was Young Presidents Organization. So he sponsored me into that. And he was in the Indianapolis YPO group. So through him, I met a bunch of other people.
Mm-hmm.
So even though those satellites ended up being iffy at the time, I made money. We made money during some of that. And it didn't hurt us, but it's the other people that we met and the companies and stuff we would, instead of being a Bill McLean where you go out and slap everybody on the back and you blast into a country club and you'd meet everybody and then you'd start hawking them for business. That wasn't us. I would meet a guy like Bill McLean or a Roland Nobis or this guy or that guy, and then all the people in the Christian Business Committee who I knew would all refer us out and all that kind of stuff. So we really didn't have a designated marketing company or marketing project like what you guys have now. We didn't have that. We were just people we'd meet, and relationship developing. And my problem was on that was I was not as motivated I was not naturally wired to do that. I had to do it. So I did it through other ways. So, and all four of us are kind of wired that way except for Tom, but Tom didn't really do it in a developmental for business. It was like making friends. So.
When you did the satellites, what all locations did you guys buy, agencies?
Bloomington was first, and then we went up to South Bend and met a guy up there, and he was in the group insurance business. And the group insurance business was starting to develop then. So it was in the early 90s, and the group business was taking off, and we didn't have a lot of that. So I met this guy up there. Maybe I'll think of his Thornton. What was his first name? Mark Thornton. And he was up there, and he had like 3 or 4 producers working in his agency. So I hired him and bought his agency to come down to Indianapolis, which he wanted to do, and be the head guy at our group department, since he had that ability. You won't believe this. Week after we bought, I'm going to say a week, 2 weeks, 3 weeks, whatever it was, a month. It was right away. Their biggest producer won the lottery. Got $1 million. So he was gone. So, I mean, how do you that's my business plan. How do you account for that one? So they moved down there. Some of the business then fell off because the guy left, and then those relationships were gone. And so Mark did a decent job of developing a group deal. And then we got into some growth in that area. It was good. And then I met a guy through New England who's was the Endress. His last name was Endress. And he and his brother, and Endress would do all of the Fred. He had a program where you would go into various companies, large companies, and sell them payroll deduct life insurance by doing financial planning for them. And he would hold seminars. So he only did one company. He did Cummins in Columbus. And he was making $100,000 a year doing just Columbus. So we got together, and I'm sitting there going, well, I think we could expand that. So I had Jack. He got a hold of here, AT&T, Subaru, Lilly, all the major companies around Indiana. And we were doing seminars in all of them. And then we had to hire all these guys to go in. And the difference was they couldn't close and get the sales done unless it was a one-shot meeting like Fred could do with Cummins. He'd go back to Cummins and meet these people and develop relationships. And he had hundreds of people on payroll deduct. Well, all these other things we went to, Subaru up in Lafayette, and we had Fort Wayne, there was a huge one up there too. And then we had, the one in Kokomo, the Chrysler and Delco. We went to all those. AT&T here on 75th Street, right across the street from Heritage. That's where AT&T's headquarters used to be. We had seminars there. We had them everywhere. And these guys couldn't close. I mean, we were breaking even, and we were meeting thousands of people.
Do you think that's the idea of, you said Endress?
Yeah.
Like he was the founder of that, right?
He was one that did
he owned it.
He owned it.
And everyone else that came along after that, it was a job.
Yeah.
Do you think that was kind of the difference? Is that just different mentality of you just ownership of the opportunity versus like, this is my job and
Well, that and the other thing, Ben, is that I've learned that there's few people when you're working off-site, you're not in an accountable situation other than the fact of you had a seminar, 25 people showed up, that seminar lasted 5 weeks in a row, and then you had 20 of the 25 say they'd like to meet with you and go over their financial plan. Having the discipline to say he's going to follow up and do all that, it was self-motivation, discipline to get it done. So there was too much freedom in these people's life to be able to bring it home.
yeah.
If they sold 3 or 4, that was great. But they had an opportunity to sell 20, 25, or 30.
Yeah.
They'd only get 5.
So is that
And then they learned, here's the big problem I had with agents and that kind of stuff. People would get comfortable making a living that was not going to allow many people to make much money in addition because they would only make 50 or 60,000 bucks a year, and they were okay with that. And instead of saying I want to make 100 or 200, they'd tell their families, we're going to learn to live on 50 grand.
Yeah.
We don't want a big house. I don't want to have to work that hard. I don't want to, have to work 7 o'clock at night or to get those other appointments. I'm okay making 50.
Wrong person.
Yep.
and probably, look in the mirror, that was just a management structure that was tough for you guys to
Tough
get
for me.
past.
It was tough for me. I couldn't figure out how to do it. And I think you guys probably could have done that. But it was frustrating me because I had so many accounts I was also handling.
Yeah.
And there were all these other branches I was going around to because we had the guys from South Bend came, and I think we closed that one down. Then we had one in Kokomo.
Right.
And those were 2 guys from Farm Bureau that I met, and they wanted to be part of it. So I had 2 guys there. I had a guy in Muncie, and then I had a guy 2 guys in Columbus, and then we had Fort Wayne. And
So every more or less major market in Indiana.
yeah,
Outside,
the only one we didn't
outside of
do was
Evansville,
Evansville. We didn't do
because you couldn't get
too
there.
far.
Yeah.
Yeah.
So
At peak, you had 5 or 6 locations because you probably closed South Bend.
I think we closed South Bend.
So you had Bloomington, Columbus, Kokomo, Muncie, Fort Wayne,
Lafayette. We had Lafayette.
and Lafayette.
Yeah, we did have Lafayette.
So you did have 1, 2, 3, 4, 5, 6 locations.
The reason we had Lafayette is because he had Subaru.
At a point in
We were
time.
meeting so many people there. It was easy to recruit somebody that said, we're meeting over 300 or 400 people
just take
a year.
take the orders basically.
Meet these people,
Yeah.
Were you also selling? I know you had this payroll deduct life with large employers, but at those locations, were you also doing home and auto and general commercial business and trying to?
That was the
goal.
That was my goal and our vision. All of us, the 4 of us talking was, you're giving them a tool to get in, and you're giving them a tool that you're going to really create a relationship with. Can we manage them taking advantage of it? And the end result was, no, we couldn't.
But you're doing it mid-90s.
We were doing it
Early to
early
mid-90s.
90s.
Early to mid-90s.
Yeah.
Pre-internet.
Oh, yeah.
Ubiquitous cell
No
phones.
cell phones.
So you're managing it by phone calls,
Yeah, phone calls.
letters,
Yeah.
memos,
Yeah.
and
In
personal
person.
visits.
Yeah, personal.
It was
visits.
all labor intensive.
How often were you trying to be in each office? Once a month?
Yeah, probably once a month.
So
And then I get called if there was a problem, in the sense of the guy down in, I remember the guy Mark, was down in Bloomington, and he was handling Roland's businesses. And Roland called me and said, this guy's screwing up. He pissed off the owner. And I said, I'll be right there. So I'd go down to Bloomington.
Yep.
I'd meet the guy, and the guy would go, well, I don't, this guy is, and then there's another thing, right? And down the road, he ended up stealing money. So then this guy says, I only want to work with you. So now I got another account now in Bloomington I got to go see. And this guy, we found out, was working as an example of what you ran into without the internet, without being able to know what people were. He ended up working nights in a grocery store as a second job.
which is not bad, but if you're exhausted
Yeah, I'm saying
coming in,
you don't have enough opportunity with what we're doing here.
right?
What are you doing that for? I mean, you've got all these businesses.
You can
and
quadruple your income by
why
doing
don't you
this.
just spend time with Roland?
Yeah.
he knows everybody. He knew the people, the cooks. He knew everybody in Bloomington. He was one of the top, I'm going to say 10 or 15 people in Bloomington when it came to financial wherewithal. He was it.
So you're leaving Indy once a week to go to one of these towns to either manage or clean up a mess.
Yeah, and I had the fault thinking that everybody, in the back of my mind, my training was, these guys want to do more.
Mm.
They are motivated. They want to be successful. And I found out that most of them, 80%, the old 80-20 rule, 80% of them only wanted to get by just enough so they could live the way they want to live. And they figured out it was too hard to live. It was too hard to make enough money to live like they think they want to live, than just get by.
Yeah.
You know, I wish I could join a country club, or I wish I could have a Cadillac, or I wish I could do, well, you got to work.
Yeah.
Okay. Well, God, just,
But your guys' management style demanded just complete self-autonomy.
Yeah. Right.
And
trust.
There's just many of us need accountability.
Right.
And so
we had something like, I think we had 20 people working in Fred's division, 25, going to these various large companies that Jack got all these appointments.
Mm-hmm.
Jack did it all. Set it up, called them, said, here's what we're offering. Does this sound great to you? Oh, yeah, we would love for you to train our people on, you know, it's like
budgeting. And
it's like the guy down in
Dave Ramsey.
Dave
Ramsey.
Early Dave Ramsey.
Yeah, it's an early Dave Ramsey. You know, here's what your debts are. Here's what your credit cards are. Here's the budget. Here's this. Do that. And then, you know, oh, by the way, you need to have 401k, or you need to do this kind of retirement, or you need to put money in life insurance, or this or that. They loved it. AT&T said, I can't believe you guys would do this for us. Great. Lily would, great. Come on down anytime. It was always after work or after a shift.
Mm-hmm.
And it was an hour. And it was like 5 of them. You know, 5 classrooms, 5 classes, and then you're done. And then it's like, can we get together and implement the plan?
Was there also sort of a shock and awakening? You grew up in a household where when Dad said do something, you did it. That you translate into your own business career. You're the owner of the agency. You've got some team members you're trying to give opportunity to, and you say, do this. Early on, you don't think twice. They're going to do it.
They're going to do it. I was not a babysitter.
That's the hardwiring.
My family was not babysitters.
And then when they didn't, you were shocked.
I'm shocked. Yeah. And it took a while for you to realize it didn't happen because of the communication, the fact of there's no technology to follow up. I mean, it was just all papers. You know, I'll call this guy in and I'd say, okay, you know, the Indianapolis guys, I say, let me see your appointment book. And he's got, 3 or 4 in the week. And I go, well, how many people responded to wanting to meet with you? And he'd pull out a file. There's nothing you could get yourself. And here's 20 papers saying, come meet with me. And I'm going through them, and then he's got every excuse in the world, wife is sick, car broke down, they couldn't meet with me, always something, right?
Yeah.
End result was, I'm staring at 20 opportunities. And if I'm looking at 20 opportunities when I was responsible for something, my thinking, my family, if you don't do at least the 20, where's the other 25? Where's the other 5 that didn't sign up? Why didn't you call them? So, I mean, I'm sitting there going, are you? And then I figured out people just don't really want to work to make what they say they want to make. They don't want to do it. And then unless they're held accountable, maybe technology changed a lot of that because you can't get away with just skating.
Well, it created the phrase that we still use today, which is we generally want for people more than they want for themselves.
That's exactly right.
And trying to weed that out sooner than later is the real trick.
Yeah. And we hired people, you and I did, people that we would meet and they don't want to work that hard.
Mm-hmm. Yeah. It's just,
and they always fill up their time with something else. Granted, selling is not easy.
Yeah,
that's a difficult thing to do.
Start. Yeah.
It's tough.
Yeah.
But when you lay all these opportunities out, and that's why when Jack was talking about all the things we tried in that first video we did with 75 Year, if you remember that comment he made about we tried every marketing stunt in the world and they just didn't seem to work out.
It was less than desirable, however he phrased it.
That is what he's saying.
Mm-hmm.
So you guys got through, bought all these agencies, challenge. First of all, it's impressive to string all that together. But the management of people in different locations just didn't match what you guys
Didn't match the opportunity. And then,
what you were able to
right.
follow up on, more or less.
Then the other thing back then was because we had so many different insurance companies and because we could move a couple of large accounts around to different companies when the other company would try to not give them the best deal, I would go out. One of my jobs was to develop a relationship with the head people at these insurance companies. Jack would write the account like Continental. I would go meet the Continental people, the head group. I would go meet Maryland's group, who was in Indianapolis. I would go meet USF&G's group, St. Paul's group. I would meet all these people, and I would develop relationships with them, and they'd say, you got all these things out there going, and you got these agents, and you got these branches. What can we do to get more business? And I would always negotiate, let me price it myself within reason, and you would approve it. But let me close the deal fast. We got that done, but the biggest one I got done was with Maryland. And I think I've talked to you guys about that. I ended up being on their national board and all that kind of stuff. But the people at Maryland said, we will write anything other than medical malpractice that you want to bring to us. And if we have to buy the business for a year or so, we will do it. We want to get business on the books with you guys.
You mean every class? We're
Every
talking
class.
contractors, transportation.
We do it all.
Healthcare.
Tom and I and Jack, we wrote a ton of business for like 4 years.
What did they give you as a guide to price it? Some
Well,
sort
the
of
guiding-
grid sheet?
Well, the guiding was we had the expiring policies.
Okay.
We'd look up the class codes. We'd see how much they're getting a discount. Were they really getting a good deal?
Right.
Then the key to it was, what was their loss ratio? Was it willing to go below
The
what
loss
they
ratio
had?
was favorable.
Favorable? If it
You
was
could start undercutting the
And
expiring.
the thing we kept talking about was best in class.
Yeah.
That's what we wanted, because that's truly underwriting.
Yeah.
Underwriting means you're really looking at the account instead of saying,
Class underwriting.
class of business, and I'm only going to do this. Well, I want the best in class. You know, Ethans are always the nursing home. They were always best in class. So we would go out. We wrote things that were, Tom wrote an account. I went up with him when we wrote this up in Fort Wayne. It was next to Fort Wayne. And it was called Richard's Restaurants or something.
Right.
And they had a little village, like a little entertainment area where people would come and they go through a chocolate making factory, and they had goats and belts and things like almost like a little bitty village, like
Like an agritourism.
yeah, it's kind of like a little Nashville.
Mm-hmm.
And so nobody wanted it because he also had a pet tiger, and he had this and he had that. I mean, it was like this guy was just out of his mind. And so we went up there and wrote that like in a day for like $400,000. And Maryland loved it. No losses. This guy was on site all the time, his business, his family. He did everything. He was the maintenance guy. He was everything.
But for context, the alternative at that time, the process was filling out the apps, mailing or faxing them,
Or delivering.
or physically delivering to the underwriter,
Yeah.
and waiting how long?
Oh, you have to sell it to him. And then, I mean, talk them through it and say,
Right.
oh, I'll think about it. And you're talking 2 months before they would get a quote to you.
I mean, that's just so.
And I would cut it down. We would cut it down into days.
You essentially did, in human form, what the sites allow us to do
Yes.
today.
Yes. Except the site, I'm sure your
We
site
quote
has,
ourselves.
your
You
site
quoted
has
yourselves.
boundaries to it, though, at times.
At times.
We got away from the boundaries.
Yes.
Which was really good.
Oh, no, I shouldn't say that at times. Yes, there's absolutely, sorry, we don't do this category,
Yeah.
whether it's best in class or not.
Yeah.
So you had total blue sky.
Blue sky. We went after everybody that was decent. That was a good in their class. We would go after it.
Gosh, can you imagine if there's a carrier like that today, what you could
Oh,
do?
it was just, the only thing that was close to that at that time was Erie,
They're probably still a lot like that.
because they were very much a generalist, and they were very much best in class, and they wrote things quick.
Yep.
And they did even things like trucking. They did all sorts of stuff that was really hard to
Yep.
do. They
So
did
what
it all.
happened to the Maryland?
Like everybody else, they got bought.
And
Do you
then the
remember who
show's
bought 'em?
over.
Then it was,
Who bought
over.
them? That wasn't IA, was it?
I'm not sure who bought them. Well, I know it was a sad day for me. Just like St. Paul got bought.
Yeah.
by CNA. Continental got bought. No, Continental got bought by CNA. And then you know what they did? After 2 years, they canceled everything Continental was. All their policies, all their relationships. They canceled them. All those nursing homes we had, they canceled them all.
Didn't St. Paul go to Travelers?
Travelers took over St. Paul.
Yeah.
CNA took over Continental. USF&G got bought. Great American or General Accident got bought. Hoosier got bought. Monroe got bought. I mean,
How quickly did you know after Maryland got bought that you're like, oh man, the gig is up?
Oh, I knew it was up as soon as it got bought.
You knew it, but how quickly did it actually trickle
12
down?
months.
Took a year for it to trickle down.
Yeah, well, they start firing all the people.
Yeah. The people who you cut the deal with.
Yeah. I got the deal with the vice president of the branch, the ran the whole branch. She was just incredible.
And she's gone.
She's gone. Yeah. Yeah, she got me into the board up at the Maryland agents thing. That's when I became the head of the board, and I brought in that Bill Clinton impersonator for the whole thing. It was just,
which came full circle recently.
which
somebody
was
we knew
recent. I
knew
mean,
him.
yeah. I mean,
Was he out of Huntington?
Yeah, he's out of,
Yeah, Mike knows him.
and he was, I mean, you talk, and that was in the 90s when Clinton was the president.
Yeah.
And I'll tell you, those guys in Baltimore loved him. They thought that was great. And then at the same time, Clay was selling about every 3 or 4 years a mega insurance deal that would bring in $300,000 to $400,000 in revenue.
Right.
In fact, his one sale was so big in '84, we got, I think, $400,000 in revenue, and then they put Jack, myself, and Tom on a $25,000 salary for 3 years.
3 years.
On top of that. And then he gave us overrides. He said, you guys sell any more life insurance, you're going to get this plus this plus this. Of course, the three of us didn't sell any life insurance. And then Clay went dormant for 3 years.
Yeah.
So,
So
what
it
was
was
it
all
like?
these kind of things.
Yeah. What was it like going on that journey with your brothers?
When you think back, and then you think about all the personal stuff where we end up building houses together, you know, next door to the cousins and all that stuff. It was an exciting time where you kind of felt, you know, and this will sound strange to you, but my grandmother had a uniqueness with the Allison name, right? Kind of a unique story to tell.
Mm-hmm.
And then Dad had a uniqueness with the war and doing what he did. And we kind of, at least I did, I felt we had kind of uniqueness because of our family, how it was made up and how we worked together and how we lived next door to each other. In fact, we would go out and give our testimony, the four of us at CBMC deals. And then that was, the tagline was, how do these people not only work together, but live together, you know, knowing that there's problems.
Yeah.
You know, and nothing that's perfect. It's problems, especially with our four personalities.
Yeah.
So a lot of highs. I was a very calm person as far as trying to run the whole thing. As far as Clay had his role, Jack had his role, Tom was doing his thing. So I was kind of the glue that would bring, and, you know, let's talk about budgets. Let's talk about that.
You were the root note of the chord.
Yeah. Yeah.
Yeah.
And so I didn't have any authority over them, but it was just a matter of, I pushed it, get together. I pushed the relationships. I pushed the fact that we were doing something. And then when we went and did something like Endress, and we got all those accounts that Jack was getting appointments for, Fred would work with me as far as the business itself, and then Jack would be running with his agents as far as where he's supposed to be, and here's the appointment dates I got with Subaru or, you know, all these crazy Delco, and you're thinking, we're going in and talking to everybody at Delco and AT&T and Lilly and Subaru, and we're talking to all their people, all of them. And that gives you kind of a, wow. I didn't bump into Wells or MJ at that stuff. They didn't have a clue what we were doing. And so they're going, Connor's doing this and Connor's doing that, not knowing that it was either break even or an opportunity that was not fully utilized.
Not fully realized, yeah.
Your dad was resourceful in his war days. He talked a lot in his recordings about not having a lot of skills himself.
Right.
But he was good with talking, good with thinking about things.
Thought ahead.
And organizing. He could see certain people's talent and put them into play. And I think you did a lot of that, not only within your own family and your brothers, but within the team, within your business contacts,
Yeah.
to where you took their skill set and said, you know what, you may not be good at this, but you're great at this. So let's just do more of that.
If I had you two guys in the group when we were doing what we were doing, it would have been a totally different deal. Your skill sets, both of you, would have taken advantage of all those opportunities. And you're doing it now, which is great. And a lot of it is who you are. And then also some of it is by the technology and your ability to know what's going on instantly.
Mm-hmm.
I didn't know things were falling apart or in trouble or had to deal with something until
Well, it fell apart by the people that got put in the positions.
yeah.
And you were looking for geography at that time as opposed to maybe specific talent
Yeah, I was looking for opportunities.
in certain
I'd meet
cities.
one or two people in a location.
Yeah.
And they say, God, I really want to be with you guys. You guys are unique and love what you're doing with these insurance companies. You got all this stuff you're growing with, and you were growing. We were growing in our own right because we were now writing businesses. Ethan Jackson bought all the Preston Safeways, 50 of them or 40 of them across the state. So we got into the writing all the grocery stores.
You got
So
the
the people in the
grocery
grocery store industry started talking to us that other people wanted us to talk to. And then Ethan and Frank would go out and do cotton farms and wine markets out in Arizona. So we got knowledgeable in that area. And then they'd go out and do self-storage, and I got so you meet people he was one of our best marketing departments. Not that he even tried introducing us, but because we would do this, people that were either his friends or competitors say, well, you did that for him. If you can work with Frank Jackson, you must be good. Because that guy's rough. He's tough. If he's
demanding.
He's very demanding. If you can take care of him, I want you talking to me. So Jack and I picked up a lot of business that way. And then the Maryland thing on top of that was anybody I'd meet, I think I could beat their price. I could get a better deal.
Can you recount the story about Frank, about you calling him and telling him that there was a problem?
Yeah. Frank, we had his homeowners at that time. And so it was personalized, and I was doing more personalized and commercial stuff or just following up on stuff. It was early. It's probably 75 or 6. And I called up Frank. He answered the phone and said, hello, Frank. Oh, hi, Jim. I said, Frank, I got a problem. Click. I go, what? I've never had anybody hang up on me, especially Frank. I mean, or Ethan. They're like, long lost uncles.
Yeah.
So call back. And I knew the problem. Hi, Jim. Frank, you got a problem. Oh, what is it? What's my problem? Well, the problem is your insurance stuff is not working out right now in your home. No, what do we need to do? That those are little educational points. You sit there and you go, my dad never would have done that. It's like, then you learn this from all these other guys that own businesses, how they do things that is so unique to them. And you go, and then you realize going back, how it must have affected his family, his kids, his relationships, if he was that tough, how my relationship with my dad was tough in some people's eye, how it affected me. Then you start understanding why people are the way they are.
You weren't the only injured young man out there in the
workforce.
workforce.
Every father is imperfect. And so I learned by watching other people's mistakes, especially my 2 older brothers. I learned a lot by watching them because my father was much more severe with them than he was with me. Clay was firstborn, so he got the first reaction, at a dad. And so Clay's always been, dad shadow type of thing. And then Jack was the rebellious one. And since he was strong-willed too, and so they would, go at it. And I didn't have that kind of personality. And so I'm sitting there going, I'm not going to do that and get that result. I'm not going to do that. And then
you picked a third path.
So I picked the other path.
So you guys were talking about the Maryland, acquiring agencies. You're doing, all of you guys are doing that with, even just mentioned with Frank, with having family at home, but you guys are doing that with kids at the house.
Oh, yeah.
So what were kind of the lessons learned about trying to running a business while having a family at home?
Well, the family thing to me was the most enjoyable of all of it. I didn't necessarily feel equipped to be prepared to be a father. But scripturally, I knew that family was the core to a meaningful life on here. And so I really enjoyed the idea of preparing the three of you to be adults and be prepared. I know I didn't do a lot of the social and messing around stuff like other dads necessarily might have done. I came to all your stuff and all that, but as far as doing things with you, I don't think I did a whole lot, maybe okay amount. But I think our purpose, your mother and mine, we didn't want to be your best friend. I wanted to be your father. I wanted you to know how to prepare for and especially I wanted you to know how to deal with conflict, because conflict, if you can't deal with conflict and if you don't see conflict as an opportunity, you really miss out on things that you can grow with. So I really saw you have to dig deep in a child's relationship and not make things personal or surface level stuff. So I think, and we tried to demonstrate, your mother and I, that we never argued in front of you. We never gave you concern about our commitment to the family or anything like that. We treated each other with respect. We didn't allow the kids to treat us disrespectful as far as talking to us or tone, and girls are different than a boy. I mean, girls are really snarky when they get into middle school. It's a whole new thing, having three brothers I never knew before. But when you deal with girls, you really got to get in their face in a loving way and talk to them about what's going on, how you're impacting your mother, or if you get that middle-aged snarkiness, well, you're an idiot, or you're this, or you're, nobody likes you and all that stuff. And so you got to confront it. And so I found in business, if you confront problems in business, you get better results. So if you confront things at home, if things aren't going right with people's conversations or issues at home, you just you got to see it as a good thing and not a bad thing. You got to see it as, this is a opportunity. This is learning time. This is something that's going to mean something down the road. So, and I find that not only do kids not know how to do that, but most adults don't know how to do that. They don't know how to take confrontation or a problem and work with it. And not every time it works out well. I mean, even, you guys have seen things when you deal with things in schools or business or this, if, you try to do a restorative relationship and a conversation and a confrontation, more times than not, it does work out if you can get people to sit down, but sometimes it doesn't. And
how much of that was rooted with your dad?
all of it.
Yeah.
All of it.
He showed you that it's worth it.
It's worth it. It's where relationships really develop.
It's where they go deep.
That's where you get a real relationship, is when you can sit there and say, let's talk about this and get into why this is happening, or why did you do what you do, or why did you think that way?
Well, he survived the war because he was willing to pursue some of those things that seemed like impossible relationships, and those relationships end up literally saving his life.
Exactly.
So it was not only the framework of what held him to be as a survivalist, but it allowed you to become a human, to be here today, to say, hey, Jim, son, if you don't pursue conflict, you never know what may never materialize.
That's right. And when you do that, and you've had experiences of when that's worked out, in the sense, you really see how valuable it is. You really have a relationship with people that are valuable. It's not surface stuff.
Mm-hmm.
I've always found, and it beat into me, that if you got a problem with somebody, or you got something, because he would come at me all the time. What are you thinking? Why are you thinking this? Why is
your dad?
My dad. Why are you thinking that way? What's the point? Why are you dating that girl? What's about her do you like?
Mm-hmm.
It's like, nobody asked me that. Nobody asked me what I'm thinking about stuff like that.
What percentage of people out there do you think are willing to pursue the conflict?
Very few.
But if you had to put a number to it?
I'd say probably 20-25% are willing to get in. First of all, most of them are shocked you want to talk about it,
mm-hmm.
or you want to get that deep. They just aren't used to that.
Mm-hmm.
But if you say, hey, well, let's just settle, let's just talk about it. Let's go to this.
My experience is there's about 25 or 30% that when you do approach it, they simply can't function.
You mean like they shut down?
They shut down, and you can try, but they can't even go there emotionally or conversationally or mentally.
Yeah.
And then so you're left with the 25 that can do the conflict, and then the other kind of middle group that don't like it, but they'll go on the trip with you.
Yeah.
And there's that other quarter that you can try to go there, but
yeah, business people less because you don't get the opportunity, but family and friends is where it's really tough.
mm-hmm.
You know. And as you know, the four of us are all very different, and my brothers, but I go there with them all the time.
Mm-hmm.
I mean, even though some of it's there's not a change in behavior but we get to that level. I mean, we do.
We've also got 70 years of history.
Yeah.
Yeah.
Yeah. So, and it's not easy.
So just another question around family or running a business and being that busy while also being a dad. Like, what were some things that were like non-negotiables for you, or what were some things that what are some maybe systems that you had to try to keep your priorities the way you wanted them to?
Well, first of all, I was involved in scriptures a lot, either reading the word or I still do it today. I never listen to the radio. I have CDs that are Charles Stanley, Barnhouse, or others that I've listened to over the years. And I use that. To me is very valuable time. Even when I'm only in the car running down the street to a restaurant or anything, I'll have that going. Right now I'm listening to Charles Stanley. He's going through conflict, which is really good. And, scripture says, set your mind on things above and not on things of the earth. And it's hard to set your mind on things above if you are constantly involved in the earth, the world system. I mean, it's all about money or this or that, and most people, Christians, have a very hard time not being caught up in the world and its cultures. It's hard. But what time I do have, I spend it either that way, making my faith and the relationship with Christ paramount. It's interesting, and I'll just take a little dive here. It's interesting when things go really well, you don't get that concerned with scriptural things. You just, things are great and you just keep going. It's when things get kind of rough and you get surprised or disappointed and all that, and it kind of drives you to the word. But it's important to discipline yourself that when things are good, that you do still stay committed to learning and to understanding what God wants. And then, and I'll get back to your question. And then the other thing that I've always thought about is that I've won the lottery. I mean, I'm 350 million people in the United States, and there's 6 billion? And I'm living in a country that's most advanced, most free, God's problems, but that's because there's people in it. But I'm sitting there thinking, things are good in comparison to where I could have been born. And so I'm sitting there going, I ought to be thankful for that. Even when I'm sick, or even when I'm broke, or even when I still got things here in this world, living in the United States, that I am very thankful for.
You get wind at your back.
And so you go, wow, I've already won the lottery. So I'm already in the upper 5% of the world. When you think about economics, housing, things that freedoms, to all that, I'm already in the 5%. And so I go, okay, that has always stayed with me. I've been very thankful for what I have, where I am. And I was very thankful for my parents. And then I was thankful for the opportunity to do a business and work for myself, because I don't think I would have really done well in a structured, large, bureaucratic organization. I just don't think I would fit well.
You don't think you're middle manager quality?
No, I don't. I like thinking out my own problems. I like figuring, and I made a ton of problems. I made mistakes. And then you go back to scripture and you say, okay, first of all, my first priority is my relationship with God. My second priority is my relationship with my wife. So I knew that if I came home from business, no matter what I was doing, how bad it was, I can't bring that home. I got to focus on her and I got to focus on you guys. And I think I was pretty consistent with that. And I remember there was a couple year period there where our cash flow was so bad. I spent literally 2:00 in the morning to 4:30 in the morning on the couch thinking about what am I going to do the next 3 or 4 days, either to make payroll, pay off the insurance companies, have enough cash. 2 years I did that. And I was, you get that kind of that shaky feeling where you're just kind of unsettled. I did that every night except for Friday night and Saturday night because I knew I wouldn't have to have a bank call me or anybody call me on a Saturday or Sunday. So Sunday night and Thursday night, I was like, what could happen? Did that for 2 years. And that's when we went and got the seconds on our homes and funded the business better. And so, and again, I couldn't have done that without Tom or Jack. And so, but I came home even when it was that bad. And you guys, I wanted you guys to have a life of what a family should be. And a family should be, preparing you to be an adult, not for you to sit there and listen to my problems.
Did you bear that burden alone?
Yeah.
Could you have shared that more equally with your partners, your brothers at the time?
I could have shared it with Tom more. Clay was in a position where he was not able to do anything. Money was tied up and all that. And he was in his own world. Jack was kind of the same in the sense that he didn't have the opportunity Tom had because of his family being able to help out.
So you could have, looking back, you could have emotionally shared that a little better.
Right.
And not just done
I bore it too personally.
Yeah.
And the reason I bore it personally is because I felt it was my responsibility.
With your
I ran
role
the company
as the president of the company. Yeah.
I ran the company. So if there was any problems with banks or any kind of problems with insurance companies or not paying bills on time or anything like that ever happened, it was my
equal shareholders, but different in title.
Right.
So, yeah.
Right. But going back to your question, Ben, it was like, I really wanted to keep my faith straight. I really wanted to be a husband to Chris. I didn't want to do anything with her that would bring her any kind of look to you guys that there was any issues with her. I mean, I wanted to honor her in front of you. And then you guys, I wanted to prepare you for being adults. I wanted to train the girls on how to be wise. I wanted to train you on what you're going to do to be a husband, a father. So I thought of that a long time before it ever came to pass. I mean, that was always in my head about what friends do I let you run around with? What school do you go to? Why do you go to that school? What are the issues in that school? Who are your friends? And do you make mistakes? Yeah, sure. You make mistakes, but those mistakes then create an opportunity. How do you deal with the opportunity? How do you deal with a mistake? Right?
How did you guys, you and your brothers, approach or go about integrating faith and work?
Well, we did CBMC together all the time. I mean, CBMC used to have a monthly outreach luncheon monthly. And then it got to be, no, I take that back. It used to be every 2 weeks. And it would be downtown. So we would go down to the athletic club or Columbia Club or wherever typically it was the athletic club. We'd go down every 2 weeks and we'd have to bring people that we'd met in business and take them down and hear a testimony. And then we would go to a weekly Bible study together that either Pete John led, who was a fantastic guy, one of Dad's friends. Pete John led or somebody else led. And so and that's what's unique also because of the relationships Dad had in CBMC, a lot of the clients were CBMC people. So faith was a lot of what we talked about when we went and saw those guys. I'd go see Pete John at Advertising Letter and he'd say, we talk about what studies we're going to or what churches, what's going on in church or what you're studying in the book of Romans or what are you doing for leading somebody to the Lord or what are you doing? I mean, it was both. And that's the way Jack Brown was that way. Ethan was that way. So Toby Brocker was that way. So he was kind of there in our face all the time because that's the crowd we ran in. Because there was weekly Bible studies that we'd all go to Friday mornings. And then I would lead that for a couple of years, and Jack would lead it for a couple of years. And then I would lead one up in Noblesville with a different guy from CBMC. And there was 5 or 6 of those going around the city. And I would go down to Greenwood and do one for 4 or 5 months. Then I meet all the guys it was all the same crew.
Mm-hmm.
And so it was there all the time. Whereas you guys don't have the CBMC. You don't have that, which I really thankful I had. I think about the people that I met that were Dad's age and older, that those guys were, and how they kept the rails, focused on spiritual things, even while you're doing business. I mean, it was everything you wanted to read about what you don't want to do. Same thing with YPO. That group, I really debated upon whether or not I wanted to go into that. And when I got into that, there were some wonderful people there, guys that were faithful believers, and then there were guys there that were off the rails.
Yeah.
Off the rails.
I think our equivalent of that now would be like a C12 or a Kingdom Factor or Truth at Work.
Yeah.
Different in that it's not necessarily outreach focused, but an opportunity to get together with Christian business leaders.
Or the fellowship and
and
accountability
talk about how to
groups.
do business and that kind of thing.
Yeah.
Next question.
But on that same topic, you've been asked about, faith in the workplace, working, how did that work out? You took it from a executive owner working with clients. That's kind of how you answered it. My question's similar, but a little different, is that what do you think is the role, and I even hesitate to use this phrase, but of a Christian business, because a business can't be a Christian, but you know what I mean?
Right.
In your mind frame today, in today's economy to 2025, going into 2026, what is the role of a business that is owned and run by someone who's a professing Christian? Is there a role?
Well, I think there is, because what you're doing is you have relationships with your employees and your staff. So the more you talk to them, hopefully they would hear things that are important to you, which would be your faith and them. As far as, I think as a believer, I think we have an obligation to do things that are beyond what a normal business owner would do. And does that cost you time? Yes. Does it cost you money? Yes. But I also think it's something that is an opportunity to say, how can I, as a Christian business person, leader, first of all, affect my staff, and then either clients or some clients. But I think if there's anything that could, and I did it somewhat, but it was a much smaller staff. And, some of our employees became believers and all that. And I remember Jack, led some Lord, and I did too. But I mean, I think the economy and society, what you guys are dealing with, it was different than what I was dealing with. People were going to church, and Christianity was an accepted aspect of a person's life. I think now there's more opportunity to do things for people in your staff, and you're doing it because you're a believer. And if they ask you why you're doing it, that's why you're doing it. I care for you. God cares for you. And I care for you because God cares for me. So how can you guys affect your staff in a way that is beyond the call of duty? And I think of Charlie Kirk. Charlie would do things on campus and for people that they were surprised. I mean, he would reach out and do things for them. And he'd talk to them and give them things. And I think that's a level of, I think when I was growing up, because men were gentlemen and they were this cultured and all that, when you want to use, that was kind of their mode of operandi. That they were nice people. And people knew they were nice people because most of the people went to church, or most of the people Catholic background, or most of the people were just kind, and that's what was expected. That was the social norm. You guys have an opportunity, or today's business owner, Christian, what can I do different for these people that's based upon the faith that they either become closer to God or they want to ask me why I'm doing this, or how does Christianity live out in a way that, well, that you guys must have spent money doing this, or you guys, why are you doing this?
It's that old phrase, lead a life that demands an explanation.
Yeah.
So lead a team, lead your employees, guide your coworkers in the labor in a way that demands an explanation.
That's right. And
well, why
only
would you do
Christian
that?
leaders can do that.
Yeah.
A bureaucrat can't do that. It's like I know a guy that is in a Christian school in a management role or a board level that worked at a Fortune 500 company that was having to kowtow to the HR demands that he totally could not support. But he had to do it to keep his job.
Yeah.
To me, that would have been torture. To say, I have to train you this way, or I have to explain benefits, or I have to explain our culture, which is a secular culture, to you this way, when I know it's not right.
Mm-hmm.
I know it's wrong. And I know it ain't going to work out for your best interest either. I know that because it doesn't, right? So you guys have the flexibility to say, I can run this business any way I want. And if we really want God to be honored, how do we do that? You're not going to solve all their problems.
Mm-hmm.
And you got people that are going to say poo and all that. But
Yeah.
at least you can stand before the Lord and say, that was a priority for me.
Mm-hmm.
I wanted them to see something different. And, I think some of the people in your firm have come to know the Lord through our agency, and, how well they've been followed up, I don't know.
Mm-hmm.
Because we all know that once you become a Christian, most people still become cultural Christians.
Mm-hmm.
And the goal is to get them to be Christians that are not cultural Christians. But we all know that's a tougher road to hoe.
Yeah. Good.
So we did that with clients too,
Yeah.
And I think back about the other thing, I was talking about CBMC that kept me on the rails was when we had an outreach meeting and people would X their card and say they would like to talk to somebody, or we called it Operation Shoe Leather, go out and see that person within a week. And they divide up the cards. Well, Tom and I and Jack always took a bunch of cards.
Mm-hmm.
So I met a ton of people, unannounced, show up.
Mm-hmm.
And back then people were in their office.
Yeah.
So I could just show up at all these office buildings and these businesses and say, I'm here to follow up with you. And we talk about, why'd you check the card? What about that? Did you really accept Christ as your Savior, or you like what you heard?
Mm-hmm.
And then I get to share my faith. But that was another opportunity to meet people that you're in business, I'm in business.
Yeah.
Oh, by the way,
You had
Jim.
similar interests.
And we did Operation Timothy's studies and met people. I was doing stuff. I had Operation Timothy's at 6:30 in the morning, probably 3 days a week for 20-some years. Wow. Meet guys for breakfast for Operation Timothy.
That was your marketing plan.
That's how I got to meet people.
Yeah.
Yeah. So.
Yeah, I remember getting up for school. You were never there.
No, it's never there.
You were never there.
Well, I
Not
mean,
for
he
breakfast.
was,
sound like
he
you
was
have an
home,
absent
well, he
father.
was home. No, he was home for dinner, but like
He was already gone. Yep.
mom's job was in the morning.
Yeah.
That was how
Well,
it was.
you now know that if you either get out before, you get out after, or you get caught up in the middle
Well,
of it.
yeah. I just remember if he was still home, it was either like you were sick or it was a day off.
Yeah.
Mm-hmm.
Like that's the only reason he'd be.
Well, Chris
home
didn't need
when
me
I-
in the morning.
when I
Yeah.
got up for school. Well, and she had Jana next door, and
Yeah.
so they had their whole system down. But yeah, you were.
I was not there. in the
I'd get
morning.
up and you were already
Gone.
gone.
I was always going.
Talk a little bit about brought in 3G. So basically all cousins came into the business, but talk a little bit about just your guys' idea around us coming into the business and what that was like from your perspective.
Well, I was kind of, and you guys can remember this and correct me where I'm not totally on spot, but I thought you guys and some other guys, young guys, were really potentially outstanding in our business, in what we do. I don't think I tried to push you guys into it, even you. I think, I didn't say, now, Ben, you got to take over. Now, Ben, you have to be in the business. I don't think I remember doing that because I think that backfires like probably more times than not.
I don't remember.
Did your dad ever do that? other than calling you up and saying you're buying the business?
No. In fact, I told him in high school, I said, he goes, we were at a round table. In fact, it's on tape. And he asked all of us what we wanted to do. And I said, I want to be in the insurance business with you. And I think I was middle school. And he asked Jack, and Jack, what do you want to do? I want to be president of the country. It's just, Clay, what do you want to do? I got to, and Clay hauled around like Clay, never gave an answer. I don't think Tommy even answered it. But it was like, I want to be in insurance business because I like running around and seeing what you're doing. I like all the people you're with. And so, but the three of you, I mean, the guys that I saw that we brought in, I think about Matt and you and some other guys we brought in, talented, smart. And I know that to be a business owner and a salesperson, I think are two of the toughest things you do in economics. Sales is tough, especially when you're not selling a tangible product. If you're selling a service, that is tough. Nobody wants it. Everybody thinks it's a waste of money. I only go to attorney because I got a problem. That's a service. Accountants, gosh, what do I want to be an accountant for? And most accountants you don't want to be around anyway because they got a personality that's pretty standard, to themselves, and they're not really dynamic and all that. So, but you get a person that's in the insurance business that likes to meet people and understands the severity of what they're selling, a contract that's going to protect their assets or protect their employees. Most people don't look at it that way. They look at it as something you're selling out of your trunk. It's like junk. Dad never saw that. He always lifted the industry up as something that's extremely important to do. So I bought into that at a very young age, that it's got all that. Plus it's got the flexibility of working the hours I want to work, making the money I want to make, making the kind of time I want to spend, flexibility of who I want to work with. I can tell somebody I don't want to work with them. I've done that as a client. I don't like who they are as a person, so I don't want to spend my time with you. Only thing I've got that I can't get back is time. So I've told people that. I said, you're a pain in the, what? I don't want to, not worth it. So I did it kindly. I didn't do it probably like Dad would have done it, but I wanted to respect them and say, this just isn't a good fit. But I just enjoyed all the parameters, because when I was at IU, I remembered I want to be a doctor. And I thought, what does a doctor do? First of all, they go to school forever. They're never home. They work crazy hours. They get sued if they make a mistake on every little item. They get transferred if they got to go residency at this hospital or go over there at hospital. Then you got to pay out all that debt back when you're, going through med school. And then you're just working your rear end off it's just, you make a lot of money. Yeah, if you get the right type of physician's position, whether you're, a surgeon or whatever you're doing. But your time is not your own. I didn't like that. So I thought about what everybody else said they wanted to do in life. I always evaluated, I want to be an airplane pilot. Okay, you're on the air all the time. You're never home. How do you go to your kids' stuff?
You're being paid to be gone.
It's like, does it sound like it's fun? Going through airports and living I don't want to live in a hotel room. I don't want to do that. Engineering, I don't have the capability to be an engineer. Out. Yeah. So this gave me everything I thought I wanted to do with my limitations of, what I could and couldn't actually do. But when I think about deciding to get in the business over that, it was just natural for me. It was something that was tough. But when you guys came in, you guys had all these opportunities I think you could have done because you were much more well-rounded than I was. I had to say, this is a ship I got to burn. This is what I'm going to do. You guys were much more well-rounded, but yet you had the ability to deal with problems. I just saw you guys were way far and above what I'd seen in other people your age. And so I think you guys taking the opportunity was great. But when I saw you guys come in, and I think it was when you came in 2006? And you came in five. So I would have been...
I just did the math. You were 53.
I was 53. So, and Jack was older.
Mm-hmm.
And so he would have been 55 or 6.
Mm-hmm.
And so I'm sitting there going, okay, what are we going to do? And then I always thought guys like you would want an opportunity. That's all life is do what opportunity so I get. And so, and I also learned from my perspective, my experience was I made a lot of mistakes in my 20s, but at least I felt like this has got my thumbprint on it. And anybody that's worth their weight in salt wants their thumbprint. I remember both of you coming to me and said, hey, I want this to reflect us, you know. But a big mistake I made was getting you elevated before I got everybody's approval. And that came back to backfire because I hadn't taken it to Jack or Tom. And your personality is get it done, kind of almost project driven, you know. And yet they've been burned so many times with all these stories I've told you about, you know, is this another mistake or is this something that isn't going to pan out like we thought? But, you know, I saw you guys needed to get in sooner than later because that made a huge difference to me.
Was that more about us or more about you guys?
I saw it as more about you guys.
Because why?
I was skating. I could keep going. Jack was, I think, getting burned out a little bit. Tom was, we weren't writing new business, the three of us.
Yeah, it was a bit of a coast.
We were kind of in a maintain the operation level, and the accounts were growing and doing that. So we were getting some growth and off and on and all that kind of stuff. So it needed a hammer to it to get it going again.
Tom was in a spot where, well, I guess that was right when we came in that he really got his second wind. He was running pretty hard.
Yeah.
But before that, I felt like you guys were still coming down off you always said it took me 3 years to get in and like 7 years to get out, referring to all the different locations.
Yeah.
And that was kind of early 90s. You sort of wrapped that up kind of late.
When we moved into the office in 97, we were out.
You were out.
All those others.
And so by the time we come around in the business in 05, I felt like you were still sort of licking your wounds a little bit from that season of like, okay, you're not staying up at night because of cash flow, so that's a good thing.
That's a good thing.
And while maybe things aren't rocketing to the moon, they're also not cratering. And if you go back and look at the financials, it was exactly that. It had flatlined, you know, and you could look at that good and say, well, at least we're not decreasing,
right.
But at the same time, we're not growing either.
Yeah, we're living okay. Everything's fine that way. But then we were also in the middle of the Christian Foundation stuff. Of
the insurance company.
The insurance company, doing that program, which was nationwide. Tom was traveling a lot with the guy, I can't think of his name, but he was a great guy. And he used to work at Church Mutual as their national marketing manager. So he knew all of the agents.
I met him once. What was his name?
Wilson. Ron Wilson.
Yeah.
His name was Ron Wilson. Yeah. So Ron and Tom teamed up and flew out and met all these agents that Ron used to run for Church Mutual to get them to put their business with the Christian Foundation.
For the work comp.
For the work comp only. And then Ron would go up to and Tom would go too. We would go up to the various insurance companies like Meadowbrook and Fireman's Fund and all these companies that became our fronting carriers. And every time we get a fronting carrier, which was the policy, we'd get it set up, and then 2 months or a year or two later, they go through a transition at top and they say, oh, we don't want to do this anymore. So I was constantly going and finding relationships who we could put the program with. And then we had the Barbados captive that we did with Ethan, and then we had to have meetings, since it was a foreign corp, we had to have our national meetings out of the country.
Oh.
So we go to Canada.
How terrible.
It was just like, keep it simple. You know, I think I wrote that on your board.
You did? Still there.
Keep it simple.
Keep it simple.
You know, how much money am I going to make out of this, you know?
Yeah.
But for the effort you put on. But it was all the things we did. I mean, it's amazing who we met, what we learned, it was an adventure, all of it.
You took a chance in your early 50s, knowing that, you know, you had an older brother and a younger brother. So you're smack there in the middle of the current ownerships of the agency at that time.
Yeah.
Took a chance on bringing us in. Josh was in, Annie was in, I was in, Ben was in.
Jennifer was in. Allison was in.
In and out.
In and out. They'd gone by then.
Okay. But then you had some other of our peers that were in. You sort of did it as the president, and you sort of got buy-in from your brothers over time.
Right.
That's how you worked. That's how you operate. That was your MO anyway. I've still got the binder that talks about from 2009 beginning to talk about the perpetuation. Well, we'd only been there 4 or 5 years.
Right.
Looking back, it wasn't a long time. You were pretty on the front edge of, hey, guys, this is going to take a while, so might as well start now.
Yeah. I wanted to get it going because it meant so much to me. When I mean, and you guys can confirm this or maybe you deny it. There's something different when it's your baby.
Well, big time.
And when you are accountable.
Big time.
And you're holding all the cards for your employees. And when you're accountable for their payroll and for the relationships with banks and insurance companies and clients, when it's your baby, it's different.
Way different.
And so I think the sooner you get into that, when you're prepared, you should do that. And if you're qualified, and you guys were qualified to do it. That's why Tom and Jack have said, I knew you were qualified to be COO. I knew you were going to make mistakes too, because your personality. I knew that. You were a lone wolf on your own your whole life. You've had to survive, and sometimes you're a wrecking ball. That's okay.
Got to break things and make them better.
I'm okay with that. I can help you through that stuff. Now, you may cause a couple of relationship burns, but okay.
But you also had a company that was, you had team members who'd just been doing the same thing the same way.
Oh yeah, we had to
for
go
a
through
decade with no top line growth, but also no decline. Like, why is this guy rocking the boat?
Every person that Dad had, we fired over time. Every one of them. And they were good people.
What's that?
They were decent people.
They just didn't sign up for what you were doing.
Right.
Yeah.
You guys are running too hard. You're running too fast. You don't do it like Clay does it.
Did you ever adopt his filing system?
We kept that system for years. And then when I think I moved to a computer in 81, we still needed a system of holding paperwork because the computers weren't big enough and backed up enough where you could doing everything insurance. I had to buy auto owners a fax machine.
What?
We were faxing everything because the faxes were a big deal back then. 80.
They didn't have one?
No, they said we're not going to get one. I said I send all my stuff by fax and applications and requests and we don't have one. I can't wait for you to get some of them. So I bought a fax machine and had it delivered to there. Auto owners.
To Lansing, East Lansing?
No, to the one up there near...
Marion.
Yeah, Marion.
The Marion branch. Okay.
Yeah. Oh, no, we don't have a fax machine. Oh, I said, you got to talk to some people about getting a fax machine. You got to run that by the whoever's to get a fax machine. That to me is just... Yep. Yeah, we bought them a fax machine. Get it up there. $200, whatever it was, back then, which was a lot of money, but...
You owned the agency for 42 years.
Okay.
1973 to 2015. It's 2025. So tack on another 10 years because you're still handling at least one account. So you've been in the insurance industry for 52 years.
Boy, that makes sense. Terrible, doesn't it?
Does. Well, if it makes you feel any better, you were still in college for at least a year and a half. So maybe you've only been in it for 50 years.
Yeah. When I was signing that note for $50,000, I had no idea how banks worked. I had no idea what I was signing up for.
Well, who paid the payment? The business?
Yeah, the business did.
Yeah. It was your debt the business paid.
Yeah. But a way to sign, we call that personal indemnification.
Yeah. With no assets other than the business itself.
Other than the business.
Yeah.
Yeah. You want my car, my
textbooks. Yeah.
Had an apartment right there at Fallwood, which was right down the street from the office.
That's not an asset.
Yeah. $250 a month. And I can remember in that was 75. I got married 76, 77, moved into the house and I put a budget together because I had borrowed $5,000 from Mom for the down payment that Chris paid back when she was working at Best Lock. She paid back the $5,000. The mortgage was $255, $252 a month. And I was paying $250 at the apartment. So I put the $252 down, and then I start putting all the things that are different, like property taxes and all that. I'm saying, can I afford this?
Yeah, barely.
And I remember two things like that. I took that to Dad. I said, what do you think? He goes, are you crazy? Go ahead and do it. That's ridiculous. Of course you can do it. And then one time, so I said, okay. And then one time I was thinking about getting Chris a mink coat, like a cutoff one. It was like $1,000 or something back in. And I go, Dad, I don't know, $1,000 for Chris. He goes, are you crazy? You got one wife. Get it for her. Do it. And I mean, and the thing about Dad was, when you get that kind of advice or you get that kind of assurance of what you're doing, when your father passes away, to me, it was like losing the equivalent would be is like losing your own personal advisor bank. Somebody you can rely upon, somebody you can just bounce stuff off on. They don't have an agenda. And you can sit there and go, kind of like a backstop in baseball, stops the balls. You can always rely upon it. It's not going to get so out of line that he can't figure out how to help you. That's the biggest adjustment was I don't have that backup. I don't have somebody that I can take stuff like simple stuff. Do I get Chris a mink coat? Do I go ahead and get a mortgage that's not a big deal? But it's new to me. It was like, do I do this?
After you signed up to buy the business, talking about backstop and money flow, did money started flowing from your business now to him as a W-2 employee and as a note holder? Did money ever come back your way after that date from him as a father to a son, or did it revert at that point?
He never had much.
So that financial piece changed.
He never wanted. He had a nice house on 65th Street. It was in I don't know what you call that neighborhood anymore, but he was okay. I mean, he lived in dirt for 3.5 years. So I mean, having a big house. It was his projects that he liked doing, being able to do what he liked. So he had a nice house. He had money coming in from Aetna because he was a career agent. So Aetna would pay him.
Had a pension there.
He got a pension there.
Had a military pension.
He got our note. He got military something. So, I mean, he was making probably.
Social Security?
Social Security, 75. Well, he died a month after Social Security. Yeah, kicked in.
So when you talk about the backstop, it was nothing to do financial.
No.
It was a relational, emotional in some cases.
Yeah.
Just
it was
man to man.
It was knowing that Dad always figured out something if I got myself into trouble or if I didn't know what to do. Or how do I put it in perspective of, do I do this for Chris or do I put an extra $1,000 in my savings account? What's the long-term benefit of doing one versus the other?
Yeah.
So and then his answers to me were always common sense. So I would come back and I'd learn that every time I would get that feedback, common sense. Let's take care of your wife. You got one wife. Take care of her. She ain't gonna see $1,000 in your savings account to mean anything.
Right.
I don't get debt, but
that's probably the greatest loss you had in business is just losing that mentor.
Oh yeah. I wish he would have been around another 10 years just so I could bounce stuff off of him. He may have helped me not do some of the dumb stuff I did. Yeah, I know he would have McLean, and McLean, I bought it without him even knowing about it because he died a year or 8 months after that. But I know he would have quizzed me on who is this guy? Who are his friends? Who does he run with? I mean, Bob French was a small guy, very conservative Catholic guy, lived across the street from Chittard. I mean, he was as gentlemanly and as conservative, basic. I mean, this guy is rock solid. Not big, but Bill McLean, here's Mr. Party Man, belonging to everything. And he would have, I'm sure, maybe he wouldn't have, but I didn't give him the opportunity to quiz me. I just went out and bought it. But he would have said, who's this guy? And I didn't, in my mind, yet know he and his friends are the same, or they wouldn't be his friends.
Yeah. But you got some good markets.
I got great markets. That was like God saying, I'm going to give you a bonus even though you don't deserve it. I wrote a lot of business that way with Continental,
Yeah.
USF&G and all those guys. Wrote a lot of business, Maryland.
Well, we're getting to the end of our our time here. So we ask all of our guests 2 questions.
Uh-oh.
I'll start and you can do your. So what is a risk that you've taken that's changed your life?
Well, probably in 1973 was a big risk.
Yep.
It changed my life. Another risk was when I met your mother, I only knew her for 2 weeks, and I said, that's the one. And I don't know why. I have to say it's because of God, conviction of the Holy Spirit. But I had no doubt. I had nothing that would say that she is the one, but I knew she was. Just because of how she conducted herself and how she was and things that were important to her. And I learned all that in 2 weeks, because in 2 weeks, I did a lot of talking, a lot of quizzing about who she was. I wasn't going to sit there and say, okay, I'm not going to get to know you. I got to know her as best I could. But I mean, it was like, okay, yeah, she's the one. I don't know why, because I dated girls before her who were very nice girls and never even thought about it like that. But so those are 2 risks.
Jim, our second question and final question is, what is left yet unfinished that you have the resolve to complete?
My grandchildren.
What does that mean?
I want to invest in them. I want to help them learn how to develop for adulthood. I want them to learn what I've learned and what you guys have learned. I want to help you in that regard. I don't want to replace you, but I want to help. And I think a grandfather has a kind of a unique position to some regard. I didn't have, my father's father was long gone before I was born, or died the year I was born. And then my other grandfather was a nice guy, but good memories, but not very impactful in my life. But I think I think God can use me in that way. And I know it keeps me wanting to live longer, because, I think it would be great to get to heaven. But as long as I got you guys and as long as I got the grandchildren, I think that's what I have to finish. But
Great answer.
There you have it.
there you go.
Well, thanks for joining us.
Appreciate
and
it, guys.
Thanks to all of our listeners for joining us on another episode of Risk and Resolve. We'll catch you next time.
Thanks for tuning in to Risk and Resolve. See you next time.